What's good with y'all boys, man? Today is June 9th, 2025, and I'm reviewing the morning session as well as the trades that I had mapped out from my Discord this morning. You know what I'm saying? So I always say, starting off with all your trades, you always want to do a top-down analysis. What does that mean? If this is your first video watching, all that means is that we go from the highest time frame and we refine our trade idea down to the lower time frames. This gives us a more accurate reading on what price is most likely going to do. Nothing in this world is perfect, but doing it this way, it gives you, with high probability, understanding where the draw on liquidity is going to be for that day. So opening up my price here on the daily, first thing I noticed were these relative equal highs. Seeing this, it gave me the indication price is most likely going to want to continue to draw up. Now, what is something else I can use to give myself extra confirmation? We can see how price liquidated this low right here. And whenever lows get liquidated, we understand there is a high probability for a reversal, which means we need to start looking for some type of PD array in the opposite direction, right? On top of that, you can see that we're also sitting right here in this daily fair value gap. We can have that marked up. I sometimes like to mark up my fair value gaps with my fib because it helps me see the consequent encroachment a little bit better. Just make this a dotted line. I can't do that. There we go. Yeah, I like the dots better. Now that we have this marked up, let's move it down to the 4 hour. First thing that jumped out to me while we were here, imbalance sitting right here underneath this 4 hour candle. I had this marked up. Banks like to move on these higher time frames. It gave me the stronger indication. Hold up, man. Somebody out here blowing some damn trees or something, bro. What the hell? Ah, it's the trash man. Okay. Now that we're out on the 4 hour, another thing that jumped out and grabbed my attention was this imbalance sitting between these two 4 hour candles. Banks move on higher time frames, so I understood price is most likely going to want to seek lower prices first before continuing bullish. I like the purple color. We can go with this right here. Always mark up your PD arrays because if you have stuff on your screen, you don't want to confuse what you're looking at. Refining everything more on the 1 hour, we can see that there is also imbalance resting right here. And you can see the way price is respecting this imbalance as well. Price have been accumulating in and out of this range for a little minute. This is good to note as well. So let's mark this up. This is our 1 hour for value gap. Now that we're on the 15-minute, something else that caught my eye, buy side liquidity was taken right here. That gives me an indication that we're most likely going to seek lower prices initially. Price was sitting around this area when we opened up our charts this morning, and I could notice how price was just accumulating in this area right here underneath the consequent encroachment of this fair value gap. You can see how multiple times price kept wicking it. This is giving me indications that price is most likely going to seek lower prices even more. And you can see also on the 4 hour, we have these relative equal lows marked up sitting right above this 4 hour fair value gap. You always want to go for low hanging fruit. It's just the easiest way to trade. It's the easiest way to scale your account. It's the easiest way to honestly just secure your money. And I ain't gonna lie to you. So one thing that also jumped out to me, these relative equal lows right here. So I understood if price were to go bearish, this would have been TP1 for me, or low hanging fruit. So this internal sell side liquidity right here. Bringing it back down to the 1 minute, it's time to see how price is going to react off of these key levels that I had marked up from the higher time frames. Price initially started off consolidating. We understand that when price consolidates, it is now time for me to expect some form of an expansion, whether it's bullish or bearish. Given the context of the framework that we marked up from the higher time frames, I now understand price is most likely going to go bearish before going bullish, which is my overall bias given the daily time frame. Price right here opened up at 9:30, 9:31. price came and broke out bearish. Once that happened, this bullish candle right here was now treated as a bearish order block for me. I'm going to mark that up for you guys. You can see just how price reacted from this level, how strongly it rejected once it popped out of this bearish order block, and it ran right down here into our TP1, which was our sell side liquidity that we picked up here from the 5 minute. While this was happening, a 5 minute fair value gap also formed. Now this gave me the indication that price could reverse and start attacking those equal lows from the 4 hour. These are the equal lows from the 4 hour that I was referring to. We're just now looking at it on the 5 minute time frame. Bringing it back down to the 1 minute, I was telling my friends how you don't really want to see price close above the midline of this fair value gap. Reason being is because if it does, it's most likely going to start spooling higher, right? So one thing that I also gave them as a context for framework was this high right here. So we had already hit TP right here. So at this point, it's about being patient and getting confirmations for our trade. This right here would have been an early market shift for me, but the real market shift would have been up here. You can see all of these relative equal highs sitting above here. If you also go to the 5 minute a little bit, this is the next short-term high that is sitting here after price got liquidated. So I understood this would have been like my overall market shift right here. But coming back down to the 1 minute, I treated this as my pre-market shift, if that makes sense. So I understood if price were to go above this high right here, it was going to most likely want to keep going in that direction. And you can see how after this high was taken, it even took out that second high as well, which is our overall market shift. But now it's about finding the entry point. The fair value gap that we had marked up on the 5 minute, now it becomes a inversion fair value gap. So because price closed outside of this range, whenever price comes back into it, I understand that with high probability, this is going to be a bullish PD array for me to enter my trade and price to continue to go higher. So let's mark this as an inversion fair value gap. There is also imbalance right here as well. So you can see how everything is overlapping. This is giving me stronger indications that price is going to want to follow my given trade idea. You can see how when price came back into this inversion fair value gap, how strong of a reaction that it had. Even when it revisited for a second time, it had a strong wick back up. These are characteristics that you would want to see when you're in a bullish trade. So now that I understand that, price is accumulating and I understand it's going to want to start expanding. But here's the also cool part. Look at the time. We have 9:50 between 10 and 10:10. This is one of our first macro times. Understanding that, I understand price is going to most likely begin to spool with more exaggerated candles within this given time frame, because this is the time the algorithm is going to be set to start spooling towards that draw on liquidity or that draw on imbalance. And you can see how price started spooling up right here towards the back half of this macro time. Now that we have the entry, it's time for us to understand where our exit is going to be. So given the context of this framework, this PD array is from the daily, which means it's going to be a stronger magnet. So after we had our entries in right here, this right here was our TP. And you guys can see how that played out right here. So entry was around right here. TP was right about here. And then our stop loss would have been below here. So you can see how we use all these concepts and we redefined it down to the lower time frame for us to have a more clear understanding of where price is most likely going to go with the highest probability. I hope this helps. If y'all got any questions, y'all can comment down below. And then you can also join our live sessions where we go over concepts and we review everything together. They're typically around 8:15, 8:30 on the weekdays. Subscribe so you can get notifications when they come up. I hope you guys enjoyed this video.